are personal finances reviewed to determine if you should get a business loan? Well, that's exactly what we're going to talk about during today's training. Look, when lenders are looking at your application, are they looking at your personal credit? What personal financials are they looking for? How do they make the decision? What factors are they even looking at to determine if you should get a business loan? Well, that's exactly what I'm about to decode right now. By the end of this training, you're going to know exactly what lenders are looking at and reviewing on the business and personal side to make their approval decisions. And most importantly, you're going to need to know the things that you could easily do to make yourself more bankable, to make yourself more lendable, fundable, where lenders want to give you money. Look, we got a lot to cover, so let's dive in. Okay, so what personal finances are needed to qualify for business financing? Well, the good news is that personal finances only come into play with some kind of funding products and not others. So what I mean by that is that when you're qualifying for harder to get financing, term loans, loans at your bank, SBA loans, in these cases, they're gonna look at both sides of your business. They're gonna look at you personally, and they're gonna look at your business as a whole as well. So when you're qualifying for this kind of financing, like the coveted SBA loans that gives us the longest terms and the lower interest rates, your personal finances are going to come into play. Now, the good news is that there's other kind of financing where it doesn't come into play. Financing that just focuses on one aspect of your business, like business credit, where you're able to use business credit alone to fund your business, or financing it's just based on your revenue and how do you manage your revenue, or financing it's based on some kind of asset or some kind of collateral like your inventory or your equipment. This kind of financing you can get around without really having any kind of personal finances supported. You can even get credit line hybrid to start your business without supplying a lot of personal financials or any personal financials as well. So there's plenty of funding options where you can get around needing to supply any kind of personal financials, but we're going to dive into what you need to know to get the best kind of financing, because even if you're getting it in the beginning or as your business grows, this is what you're really going to want. You're going to want the longest term. You're going to want the lowest interest rates. That's what gives you the most affordable payments, and this is where your personal financials will come into play. So let's start by looking at an SBA loan. If you're going to apply for an SBA loan, the best kind of financing you're going to get, what are they looking at in regards to your personal financials? Well, the first thing they're going to want to see is your personal tax returns. They're going to want to see how your business carries over into those personal tax returns. So for example, if you're an S corporation, well then your profit or loss from your business carries over to you personally. So what's happening? What are you writing off? Are you claiming a loss or not? Are you actually claiming the income you're making? Are you earning W-2 income from the business? Are your tax returns filed? Are they not filed? Have you not filed for years? Is the IRS hunting you down? These are all things lenders and credit issuers are going to be looking at. They're going to want to make sure you're in good standing with the IRS, that you have your tax returns filed and up to date, and preferably both your business tax returns and personally, you have some kind of profit, that you're not filing a loss on personal and business tax returns every single year. Look, no lender wants to lend money to a business that's losing money. They want to lend money to a business that's making money, that's making profits, because the profits are what you're actually going to use to pay them back. So they are going to ask for your personal tax returns as well as business tax returns, and they're going to want those to reflect that you're earning some kind of profit. They're also going to want to look at business and personal credit as well. So when we look at business credit, we need to make sure it's established. We need to make sure that we've got accounts that show on our business credit reports that we're paying on time or early to the business credit reporting agencies. So we've got to pay our creditors. We've got to pay our debtors, because that actually gets reported to the business credit reporting agency, and that history is crucial to get the best kind of loans like SBA. But so is personal credit. Look, don't ever listen to a guru that tells you that personal credit's not important when it comes to business financing. It absolutely is. Don't get me wrong. There's plenty of financing you can get like business credit that doesn't look at personal credit. But if you're going to get the best kind of financing like SBA loans, you need to make sure your personal credit's good as well. As a matter of fact, SBA says you want to address any blemishes on your personal credit report before you even apply. So they're telling you right there that you really shouldn't have anything negative, any outstanding collections, any late payments on major items like bank accounts, because if you have any of those, like major late payments on bank-related type of debt, like loans or credit cards, those things will easily get you denied. So yes, they're going to look at your personal credit and your business credit. You want to make sure both of those are solid, pristine, that you fixed any inaccuracies or negative items before you apply. Personal assets are important as well. Look, ultimately, SBA lenders and a lot of loans like ones you're going to get from your bank want you to have assets or collateral equal to the amount you're borrowing. Now, maybe your business has that. Maybe it has account receivables or inventory or equipment or some other kind of asset that can offset the amount of money that you're looking to borrow. But a lot of businesses don't, especially home-based businesses. Online, e-commerce businesses might not have that. So in these situations where you don't have business assets equal to what you're borrowing, this is where personal assets can come into play. Stocks, bonds, 401ks, IRAs, vehicles, even your house can all be leveraged as collateral to be able to get the money that you need. So just keep in mind, you're going to have an equal amount of assets or collateral for what you're borrowing, and lenders per SBA standards will look at all of your business assets first, and if it's not enough to cover the loan amount, they're going to want to look at what you have for personal assets to be able to cover that gap. So there you have it. Now you know many types of financing you can get without looking at any of the personal financials. And if you're looking for the best kind of loan like SBA, you know exactly what kind of personal financials and credit they're going to look at. So now you can make sure that those are pristine before you go applying for bank or SBA financing. Do you want to learn more? You want to learn more about what you can get approved for right now? Then click the link in our bio. We're going to get you access to our guide on 27 killer ways to get the money you need to grow your business. And we'll even help you with a free finance assessment to tell you all the money you can get right now. So make sure you check out the link in our bio. And by the way, if you got value from this training, make sure you like and subscribe and keep your eye out for our next training. We're talking about even more cool ways to get the money you need to start and grow your business.